Good morning, friends. Today is the 15th of December, and I'm Shuchi Rungta presenting the morning market update. The Nifty gained 52 points over the day to close at 18,660. A dull intraday session for the Nifty where it opened higher and did practically nothing, consolidated in the range to form a doji on the daily charts. The key takeaway was the Bank Nifty again outperformed the markets and the market breadth improved. The broader market participation was seen with higher percentage of advances on the Nifty 500. The top gainers were the real estate and the metal sector. Technically, the market closed right at the mentioned resistance of 18,650-670. Mentioned earlier that Nifty needs to get past this number on a closing basis for the bulls to be in complete control. The indicators are well placed, and hence it's a matter of time that the index move past the same to test our previous highs. 18,500 is the immediate support. FIIs bought 372 crores in cash market but were sellers in futures and options, selling over 66,000 contracts of calls and buying over 25,000 contracts of puts. Coming to the world developments, Fed has increased the interest rates by 50 basis points to 4.5% as per what the markets had expected. Mr. Powell mentioned that rising inflation is still a concern in the US and they may consider to increase rates by 100 basis points more over 1 year. The US markets had a volatile trading session with a bearish bias, losing around 0.5% yesterday. The dollar index has dipped further yesterday and is currently at 103.8, whereas India VIX too also trade at its lowest levels, indicating that the fear factor isn't there in the system. To conclude, as we see the derivative weekly expiry today, we may see markets consolidating within the range of 18,500 to 700 zone. Levels for the day: Nifty support will be seen at 18,510 and 18,425. Resistance 18,670 and 18,780. For Bank Nifty, support will be seen at 43,900 and 43,750. Resistance 44,200 and 44,500. Thank you.